we're in the realms of a local high in yields. I'm
Right.
not going to pinpoint it and say it's today. I would have a reasonably high degree of confidence if you could fast forward 3 or 6 months. You'll probably make a lot of money in these bond markets.
A lot of money.
Yeah. Bear in mind, a 30-year yield, if you get a rally of 100 basis points, say, you're talking about, 20% capital return. So could you rally 25 basis points? You could rally 25 basis points in very, very little.
That was Eric Lonergan speaking to us earlier, discretionary macro head at Calibrate Partners, on this very programme. Let's talk about the markets in 3 minutes. And, of course, we'll focus in on the bond market action, the impact it's having on other assets, perhaps. Mark Cudmore, our Markets Live executive editor, joins us now. Eric there, dangling the prospect that we can draw a line in the sand, that we can turn the page and stop having these days where we're obsessed with yields going higher in global bond markets. That's not today, but are you convinced by some of the arguments he's making, Mark?
I thought the interview with Eric was absolutely excellent. He makes a really strong case, very compelling. I think he's slightly early. I think there's a couple of things here to acknowledge. First of all, the fundamental concerns about bond markets shouldn't play out in the space of a few days. These are really long-term drivers. We're suddenly panicking. Now, the flip side of that is these are internal drivers, driving this move. It's internal catalysts. It wasn't suddenly a data print that got us scared yesterday. It was we've just suddenly got, triggered some losses. We've broken through levels. That's forced some more selling. That's the kind of move that either burns itself out and reverses rapidly, or it suddenly starts spiraling and we need to get some kind of reaction. At the moment, I'm not sure which way we'd go. I'd veer toward Eric's camp that we're probably near a local high, but I say it much more nervously than him. In the same way that he said we could get a 25 basis point move lower very quickly, we can get another 25 basis points higher very quickly. We've already seen UK yields do 5 basis points today at the long end, 7 basis points in 30 years. These are massive moves for long end bonds. So at the moment, the market's on the back foot. He is right that it shouldn't all play out in a short space of time. I slightly defer with him in the 3 to 6 month view, in terms that I think that overall over the coming months we still have more long end bond weakness to come, but I don't expect it to play out over the next couple of weeks immediately.
Mark, one of the points that I thought that he made that was excellent, which was basically, why do I care about the UK 30-year? Honestly, why is it so important? You don't have a mortgage market that's tied to it. The government doesn't have to issue it. You're in a situation where it really doesn't matter. Why are we so focused on the UK 30-year?
He's absolutely right. I think there's only small sectors that really care, but the point is they are sectors that do matter for everyone in the UK. I mean, things like pension funds own a lot, that the 30-year paper that's out there. And he's right. Probably bonds around the world will kind of go, stop, and governments around the world will stop issuing so long out the curve. And many pension funds might change their mandate to kind of go, why are we buying all this long-term stuff? We've lost so much money. But the fact is, they own it right now and they have lost money. So it is consequential for the people who own it. It's consequential for banks out there. It's consequential for pension funds. Longer term, macroeconomic-wise, sure, it's an irrelevance. They don't need to issue there. It doesn't have the impact in the economy as it, say, does in the US, like your last guest, George Saravelis, just said.
Oh, we're talking of George Saravelis, Mark. He made the point that he doesn't think France is going to be central to the bond route because of the structures of the EU essentially protecting France. And we're seeing Oates relatively well behaved to the sovereign debt of France today. You disagree with that? You think France could become the epicenter?
Yeah, I think that France will be the epicenter over the next month. I actually think it's the one where I'd be most comfortable kind of getting along the dip in terms of, if you want to play the Eric Lonergan's view, as I said, it's because that EU backstop. I think the EU overall as a whole doesn't have a worry, and EU will step in panic situations. But the catalyst in the domestic politics side in France, they're just mounting up in the coming weeks. So I think for the next few weeks, France is the focus of pain, but maybe it's better longer term.